Hello, Joe. Thank you so much for joining us again on your small business podcast. This is your second time here. I will say now you are a regular. How have you been doing?
Awesome, awesome. I have been good.
That's
I've been
awesome.
blessed. I'm busy. I have a great team. I get to talk to wonderful people like you all the time. So
Well, thank you. I do appreciate that. I do. I do. So of course, for those who are not familiar with you, they might be just tuning in this first episode here, well, second episode of you, Joe. But tell everyone what you do, what you're best at, what your genius is, and how you service people.
I don't know if I have any genius. I know what I love to do. I'm an entrepreneur that happens to have a CPA license. I was tricked into being a CPA by my father, who I guess thought I was going down the wrong track when I was about to graduate college. High school. I was 17, and I guess he saw that I loved being in business. I loved everything about business. I like numbers. So he pointed out this guy at a family picnic. It was July of 1977,
Mhm.
and he said, "You see that guy over there? He's a CPA." And I was like, "That what the heck is a CPA?" And he didn't tell me. He was smart. He said, "Well, they run companies, they're presidents of companies, and people go to them for business advice." So I never thought twice. I said, "Well, then I'm going to be a CPA." And I didn't know it meant I was going to be an accountant. I resented my father for a very long time. I was like, "What did you get me into?" And I love business. I had a lot of my own entrepreneurial endeavors. I'm no different than anybody else that starts a business. I could identify with the pain and suffering we all go through until I accepted it and I realized that I have a unique experience, from everything from not only starting my own business, but watching people start their own business, watching successful people grow. Unfortunately, seeing a lot of business owners struggle and fail for the wrong reasons.
Mhm.
And also on the other side of the coin, I got to see the inner workings of the government and the IRS and the state and local taxing authorities, payroll situations, sales taxes, audits, criminal investigations. So I woke up one day and I said, "Oh my God!" I said, "I could actually help people. It's not just about bookkeeping and accounting and journal entries. It's really about the human part of business." And in a nutshell, I guess that's who I am.
Mhm. Well, it's definitely much needed because, of course, most entrepreneurs, small business owners, we don't know anything about that. We're so focused on our business and what we're doing, what our service is. We don't even think about the taxes, what the law is supposed to be of doing all those kind of things. We have no idea. We're just trying to take our passion and turn it into profit. And of course, we need people like you to come in and say, "Hey, this is what you're supposed to do unless you want to go to jail."
Well, we all need people. That's
Mhm.
one thing that nobody becomes successful. Nobody can run a business on their own.
Right.
They could try, but they're going to have a very small bit, which is fine. You can have a very small business. One of my favorite businesses was my ice cream truck.
Mm.
It was simple. And, the truth is, I still needed help with that. I still needed people. That was one of the lessons they didn't teach me in CPA school.
Wow. Was that your first business, you said, the ice cream truck?
No, my first official business was when I was 10 years old. I ran a casino in my driveway.
Oh
And,
my God.
yeah,
You got to tell this story.
it only lasted one night. My parents closed me down. I guess they didn't think that was the best route for me to go. But I made like 3 or 4 bucks, which was a lot for a 10-year-old in 1970. But
Yeah.
more important, everyone had a great time. I made money, and I remember it like it was yesterday. I asked my mother, I said, Why do people get jobs if they could just make money?" I'm like, "I don't
Hmm.
get it." So,
That's
and
that's interesting.
I thought it was easy. I ran my ice cream truck like, the summer before. I had done that, other summers, but it was more like, it was just, it was like nice dreams, Cheech and Chong. My friends rode with me. It was a fun
Mm.
summer business, but it was still a business.
Mhm.
The summer before I graduated, I said, you know what? I'm gonna run this like a business. And I kept books and records, and I everything was legit. I went to a ice cream truck company, and they made me, I had to lease the truck, and they made me sign all the forms. And one of the and I made money again. I made thousands of dollars. With I
Mm.
mean, it was it was my dream come true. I was like, this is gonna be. I can't wait to graduate and get into the business world. I'm gonna conquer industry, and I'm gonna be rich.
Yeah.
And 6 months into my accounting career, I got a letter from New York State that had a big red, stamp on it that said tax warrant, and my life flashed before my I still feel the suffering because it was, "Oh my god, what did I do?" I didn't what did they think I was, like, laundering money, or and it was real. It was real, and I quickly found out that it wasn't as simple as I thought it was. It wasn't gonna be easy, and for 3 days and nights, I suffered because I was too embarrassed to remember, I was working at an accounting firm,
Hmm.
and I was too embarrassed to tell anybody that I had done something wrong, and, I thought my CPA career was over before it started. Uh, then I summoned up the courage. I asked one of the CPAs, and he said, "Well, the first thing you should do is call the number on the notice and find out what they want." So I
Yeah.
did that, and it turned out there was no sale. It was about sales tax. I had registered as a sales tax vendor without knowing it. All they wanted was a form that said I collected no sales tax and I was out of business. And I took that experience, and I think subconsciously I always gravitated to people that had problems with the taxes. They didn't understand them, and I had an ability to make them feel comfortable and also to solve problems. So that became my, and I solved a lot of, because every business is a problem. It's one problem after another, and
Hmm.
especially you said it when we start out, we know how to sell ice cream, we know how to make candy, we know how to build a house, we know about life, we become life coaches, but we don't know anything about business.
Right.
And Michael Gerber wrote a great book called The E Myth, and I recommend every business owner read that, hopefully before you go into business, because it's about the story of this woman that opens up a bakery, and she loves baking. She didn't know that she had to hire employees, and you get sucked into all the other stuff that you have to do. There's no way around it. If you got to file taxes, you got to keep books and records. And who knows about that stuff unless you're a bookkeeper and an accountant?
Right.
That's the last thing you want to learn, but there's no way around it.
Right, exactly. And that's why we have people like you, Joe, people like you. So today we're going to talk about business structures because I know most people, all they hear about is LLCs, but there are other business structures out there. And so today we're talking about what those business structures are and how to pick which one is best for you. So we're going to take each one and you just kind of tell us what they are, the pros and the cons of each type of business entity. So let's start with the sole. I hope I say this right. Sole proprietorships.
Sole
Proprietorship.
sole proprietorship, and I can only say that
Thank
because I've
you.
been saying it for 50 years. So
Yes, I knew I was gonna butcher
So,
that.
yeah, this is one of my favorite subjects. You could see I have a book here I wrote. You can get it on Amazon, the Itty Bitty book all about S-Corps, everything you ever wanted to know.
Mhm,
And a lot of what just about everything we're going to talk about today is about that because S-Corps are really the preferred type of entity for an active business. So there's really only two choices when it comes down to it. It's not that complicated. There's a lot of misinformation, a lot of bad information out there from the government and people that set up entities. I'm not going to name any names, but
mhm,
there's plenty of them out there. Some of them are big, some of them are small. And my firm actually, we set up entities because you don't have to be an attorney to set up an entity, a legal entity. You don't have to be an attorney to set up an LLC or a corporation or a partnership. Anybody can do it on their own. I don't recommend it because, especially now, with what's going on with compliance with the IRS, with the state and local governments, it's become a lot more complicated. But the choice is really very, very simple. And let me talk about the LLC first because you brought that
mhm.
up.
Yeah.
And that's what's all over the internet. Everybody thinks they want to be an LLC, but the problem with that is LLCs is a limited liability company. Liability is the important word. What it does is it gives you a shield from legal liability. Okay. It's a protective shield so that if the business goes bankrupt, the the creditors of the business can't go after the person personally. They can't go after the owner as long as the owner has not personally signed a guarantee, which is a moot point because most banks, if you get a line of credit or a loan, they're going to make the individual sign personally. If they get a credit card, it's
Hmm.
usually personal. There is a way to get business credit. It takes years, and there's a way to do it. You get a Staples card, you get a Home Depot card, only in the business, and you got to get it done in Bradstreet. And so there's a whole process to doing that. And we could coach people on how to do it, but it takes years. But the problem is the IRS does not recognize an LLC. There is no form, there is no tax form for an LLC. So you're what the IRS calls a disregarded entity.
Hmm.
So what they're saying is, we don't care if you're an LLC. There's no special tax form for you. We're going to disregard you as a tax entity, if that makes sense. So you go into what they call the default classification. So if you're a single member LLC, you default to the sole proprietorship classification.
Mhm.
Okay. If there's more than one member, you default to the partnership classification. Does that make sense?
Mhm. It does.
So there's actually, this is a little confusing, but there's also the LLP, limited liability partnership.
I've
Uh,
never heard of it.
yeah, it's LLP. It's really for professionals like doctors, lawyers that want to form a partnership, and they'll become an LLP.
Oh.
But you can be an LLC with multiple partners. The bottom line is they all fill out the same form. A
Okay.
sole proprietor will fill out a Schedule C on their personal tax return, and a partnership fills out it's a separate form, and you have to actually get a federal tax ID number for the partnership. It's a separate legal entity, which is important, and that the entity files the form 1065, which is a U.S. partnership return. Now, I'm not a lawyer, but I could tell you this much I know. When you're a sole proprietor, I'm talking not LLC or LLP. When you're a sole proprietor, you have unlimited legal liability, which means anything that happens with the business, you're personally liable for. A partnership, all of the partners are personally liable. So if you have a partner and they uh, do something, you're still
Mhm.
personally liable. You can't say, oh, they did it, but that's the legal part of it. So you can handle the legal part of it by becoming an LLC or an LLP, but it's you're not doing anything for your tax purposes. And that's what I advise people on is their tax purposes. What how should you be structured for tax purposes? Does that make sense?
It does. So it seems like the only benefit of having a LLC um, is if you get sued or, like I say, if you get bankrupt, then they can't take your personal assets. So that's really the only, sounds like to me, that's the only benefit.
No. So I don't want to. So LLCs and LLPs do have other benefits,
Mm-hmm.
but they're not appropriate, in my opinion, for if you want to, rent an ice cream truck.
Hmm. Yeah.
Case in point, you rent an ice cream truck, you have an accident, you're not covered for, the insurance, you're only covered for so much.
Mm-hmm.
Uh, you're a sole proprietor, and now you're personally liable. Well, if you're an LLC, you're not personally liable. But again, what I would tell you is if you're going to be an ice cream truck, you want to be an S-Corp. Okay. And I'll tell you why. Because a corporation has that limited legal liability. You already have that legal umbrella. So if something happens in the business, you go bankrupt, there's something, and I'm not talking about criminal activity. If you
Mm-hmm.
commit fraud or something like that, they'll pierce the corporate veil. Uh, but if you're a corporation, you're not personally liable. Okay. If you're a corporation and you have other shareholders, and the other shareholder, like let's say the other shareholder steals money or something happens, they break a contract, they default on a loan, you are not in charge of the finances. Well, you're still not personally liable. If you're a partnership without the legal protection, and your partner breaks a contract, they they do something to cause financial harm, you can be held personally liable.
Mm-hmm.
Okay.
Okay.
But the LLC comes with other types of benefits. So it's not appropriate for a single, and this is my opinion, and there are people that don't agree with me, and I'll tell you why. Uh, an LLC has flexibility in how they manage the business. So you see, a corporation is inflexible. You have to have a board meeting, which is another issue I'll bring up. When you're a single shareholder, people say, well, being a corporation is complicated. You have to have a board meeting. You have to, well, think about this. If I'm the only shareholder, I'm going to have a
Mm-hmm.
board of directors meeting with myself. What
Yeah.
sense does that make? I elect myself president. Or you know what? I don't want to be president anymore. I step down as I mean, okay, so that deals with that whole issue of all the documentation and paperwork, and that's an argument that the IRS gives you, and the
Mm-hmm.
state. They're like, oh, it's more complicated. Yeah, it's more complicated, but when you tear away the onion peels, it's what are you talking about? It's not that complicated. So a sole proprietor, you don't need to have a meeting with yourself.
Mm-hmm. Sure
But
does.
okay, so now an LLC, let's say I want multiple partners and I want to give them disproportionate, I have an investor. So he's going to share in all the profits, but if there's losses, I'm going to shoulder the losses. Okay. You have all kinds of flexibility on the number of people you can have in there. It's really unlimited. But we're talking about the bulk of the businesses in the United States are sole proprietors. They're
Mhm.
single, and when I say sole proprietor, it means that they're doing a 1040 return form Schedule C, and I'll tell you why that's dangerous. Out of 30 million businesses, 25 million are classified as sole proprietors. So now, when you're a sole proprietor, now I'll go through. So does that cover the LLC and LLP thing?
Kind of, yeah, yeah. Because I've never even heard of LLP until right now
That just
today.
means it's a partnership. It's just you
Yeah, yeah.
start out with more than
Understand.
one, and it's really for professionals. Okay.
Mhm.
Uh, the sole proprietor. Here's the drawbacks to being a sole proprietor. The benefit, the only benefit, is it's simple. Well, guess what? You don't have a choice.
Yeah.
Once you decide to go into business, no matter what it is, you're a sole proprietor. And you're required by law to keep books and records and report all of your income and expenses. Okay. That's not a benefit to me. I'm like, how is that a benefit?
Right.
It's just the default classification. So, okay, I'm a sole proprietor. A lot of people are sole proprietors and they don't even know it because they give different names to them.
Mhm.
Oh, you're an outside consultant. You're a 1099. You're an independent contractor. And guess who are independent contractors? Uber drivers.
Mhm.
Anybody that has an Etsy store. Anybody that's an Amazon affiliate. Those are businesses, and you're classified as a sole proprietor. So let me tell you the sticker shock that sole proprietors go through the first time that they prepare their return.
Mhm.
Let's say a sole proprietor earns 20,000 net. Okay, they got to pay 15% of 20,000 in self-employment taxes. That's $3,000. If that's the only income they have, they are below the poverty level.
Yeah.
Okay,
Mhm.
so how is that's not fair. That's not fair to anybody. You don't have a choice, number one. They tell you it's too complicated, but now I do my return and I don't know about you, but somebody only making 20 grand a year, I don't think they
Mhm.
have $3,000 uh without expecting it. Like, if you know going in, you're gonna well, then you can set it aside.
Mhm.
We're not even talking about income taxes yet, okay? Because sole proprietors don't make a lot of money, they usually don't hire a professional.
Right.
They usually don't go if they go to one of the national tax firms, and there's a lot of them, and they're good. They're good because they'll ask you for receipts. They'll do it professionally, and you can. It's better than doing it yourself. Okay, but the
Mhm.
bulk of them, what I found is they wind up doing it themselves, and they make mistakes, and the IRS knows that they make mistakes, so they get audited a lot. Like I said, I've had a lot of different experiences. One of them was to work for a firm where I only handled tax problems,
Mhm.
audits, offers and compromise, a couple of criminal investigations, and I got a real feel for how the system works. And it doesn't work the way most people think it does.
Right.
Okay. Uh, so in my 40 years of experience, and I've handled a lot of tax audits, only one of them came from one of my existing clients, and it's not a coincidence. It happened before I was a CPA.
Mhm.
Okay, so we had and my friend was a sole proprietor. He was a commission based salesman. Okay, we did his return, and So one of the things, if you want to lower your audit risk, is you have one of those national firms, an enrolled agent or a CPA, do your return, because we got to sign it.
Mhm.
Less chance for mistakes. So very, and I can't say few people, but a much lower percentage of people that have their return prepared by a professional get audited. The bulk of the tax audits are sole proprietors that prepare the returns themselves. Okay.
Mhm.
So that those are the major drawbacks. So, you have no tax benefits. You're going to pay 15% on your net income. So if it's 100,000, you're paying 15,000 in self-employment income. Okay.
Wow.
You get no tax benefits there, and you're at a higher risk of being audited. And from a business standpoint, you get no respect, because the way the banks, the insurance companies look at this is you're at the lowest level of business and you're commingling your personal finances with your business
Mhm.
finance.
Yeah.
Okay. So those are the drawbacks to being a sole proprietor. And being a partnership is not too much different, except for you have more than one owner.
Yeah.
So again, but partnerships are usually prepared by professionals, because if there's more than one owner, they and I'm just going by my experience. There's no
Mhm.
statistics that you're going to find that prove this. I'm just going by 40 years. I've only seen 3 corporations audited, and
Wow.
all 3 of them had big red flags. Okay. And so when you look at the audit risk compared to a sole proprietor, I've handled hundreds of tax audits. Only 3 of them were corporations.
Mm.
So when you're a small business classified, organized as a corporation, your risk of audit goes down substantially. Okay. Also,
Mhm.
you're probably, using a professional. Not many people prepare their own corporate returns because it
Mhm.
does get more complicated.
Yeah.
And there is a cost involved in doing business as a corporation. So really, when you're in business, you only have 2 choices. That's what it comes down to. And let me preface that by saying, if you want to be an LLC, you can make an election to be taxed as a corporation.
Oh, okay.
That So we have clients, a lot of them come to us as LLCs. They're like, "Oh, I set up my LLC." So I'm like, "Great, we're going to file an election to be taxed as an S-Corp."
So
Okay,
what
so
is the benefit of that for them to do that?
for the tax benefits, because they became an LLC because they had the wrong information.
Okay.
Okay. So the LLC, so another thing that LLCs are good for is if you're in a rental real estate business or any other passive activity, because passive activities are not subject to self-employment tax.
Hmm.
And that's where the big savings come in, because a passive activity in rental real estate is the biggest one, get favorable tax treatment.
Hmm.
So you want to be an LLC because you get the legal protection, and they've always had tax benefits. Rental properties rarely get audited, that from my experience. Okay, and we've done the firms I've worked for and myself personally have always handled a lot of real estate businesses. Now, if you're a real estate broker or just because you're in the real estate business doesn't make you a passive activity. A
Mhm.
passive activity is rental real estate, oil wells, coal mines, those sort of things. And they
Right.
were
Okay.
LLCs were actually created for those types of businesses. because the investors did not have the limited legal protection, but they wanted it. So it went through a whole, state level, the states, one state, I forget which one, I think it was Wyoming, passed at
Mhm.
the state level. They said, okay, you'll get the legal protection at the state level. And they had to go through this whole thing to request the IRS recognize it. And
Mm.
finally, the IRS said, because a bunch of other states passed laws recognizing LLCs, because you see, everything happens at the state level. If
Mhm.
an entity is going to get into legal problems, it happens at the state level, wherever the business is located. So once they got, the protection at the state level, it was just a matter of time that all the other states fell in line,
Mhm.
gave those investors the legal protection, and the IRS said, all right, we give up. But they didn't give up. What they said was, you're still going to be either a sole proprietor or a partnership. We don't care about the legal part for tax purposes. But the IRS said, okay, we're going to allow you to elect any other type of entity that you want. So if you have more than one member, I mean, or just one member, you can elect to be taxed as a corporation.
Mm.
Okay, you follow? So you still have, options. So to be
Okay.
an LLC, you get management flexibility. And if you elect to be a corporation, you get tax benefits. Now, what are
Okay.
the tax benefits? The tax benefits are this: you get to choose how you pay yourself. Okay.
Mm.
You get to choose if you're going to take a salary or a distribution. And this is where people disagree with me, because there's a section of the tax code that says you have to pay a corporate officer a reasonable salary. Okay. So that's where the it gets murky. So they say, well, what's a reasonable salary? The IRS gives you guidelines,
Mhm.
but the IRS does not make the law. The truth is that the each individual situation is based on the facts and circumstances of that entity. So when I get a client and I say, okay, we're going to be, and so now just let me make one other point here.
Mhm.
You can be a corporation or you can be an S corporation. Now the difference depends on what the person's current tax situation is. So sometimes, an S corp is what they call a pass through entity, meaning that the tax benefits pass through to the shareholder. Well, if the shareholder does not need to have any losses or gets no tax benefits from the entity, we keep them as a regular corporation until they start becoming profitable.
Mhm.
So if you get somebody with no taxable income, they're just starting out, and all you're going to have are expenses. If you're an S corp, you lose those expenses because it's by year. But a
Mhm.
regular corporation gets to carry those expenses forward forever.
Hmm.
And unfortunately, my experience is most businesses never make a profit. In fact, millions of businesses never even earn a penny in revenue.
Wow.
Tragic, but that's a whole nother story.
Yeah, that's a
You know,
whole that's another episode.
well, people, entrepreneurs are risk takers. Everybody wakes up. I get a brand new idea every morning. I'm experienced enough not to act on them, but I've had plenty of businesses where I never earned a penny.
Wow.
I had a scan, paperless. I bought this $30,000 scanner that you can get for 300 now. It was a
Wow.
high speed scanner. Uh, I I probably lost $50,000 on it. Never made a penny. The software was buggy, but if I stuck with it, I might have made something. But I was like, oh my
Mhm.
God. But I was 5 years ahead of my time.
Wow.
But so you So the choices really are, do you stay as a sole proprietor or do you become a corporation? So now we come up to, well, accountants will tell you, well, you got to take a reasonable salary. Well, if I got, first of all, if somebody's losing money, then I'm not going to give them a salary because
Mhm.
it costs money to have a salary now. You got to pay that 15% in Social Security tax. You see, when you're an employee, your employer pays half of that and the employee pays half. So it's split
Mm.
down. And now if you're an employee, it's taken right out of your check. You don't feel it.
Yeah.
So where the tragedy is when the IRS and the state governments and other people say, "Oh, it's simpler to be a sole proprietor," they leave out the part that, well, you should be, putting money aside because you're going to pay 15%. I think if
Mm.
a lot more people would say, "Well, if I only make, let's say, 50,000, that's going to cost me 7,500 and just in FICA tax. We're not talking about income taxes yet."
Right.
And what
Right.
they do is they say, well, it's more complicated and it costs money to be a corporation. Yes, you got to pay the filing fees. Okay, it's like $100 for,
Mm.
and it depends on the state. Some states are more. Nevada and Texas are more. Delaware is more. These are states that have no income tax. A lot of people
Mm.
uh, go to like Delaware, and that's a misnomer because Delaware is, a lot of people incorporate in Delaware and Nevada and Texas thinking, well, there's no state income tax. Well, that doesn't matter.
Mhm.
It matters where you're doing business. That's where you're taxed. So companies that are planning on going public want to be based in Delaware for legal reasons, not for tax reasons, because there's more
Mhm.
business case law in Delaware. So we get clients, they're incorporated in Delaware, but they live in New York or they live in California. And what we do is we reincorporate them in the state that they're living in because
Okay.
that's where they're based. So, we're back down to really the best choice is to be an S-Corp. And now the argument is, well, it's more complicated and it costs money. I already talked about the complication. I'm like, okay, so if I'm a corporation, I got to have a meeting every year with myself. Okay, I'll deal with that complication.
Exactly.
And then you got to, you probably have to hire an accountant. Okay, because even if you're used to doing your own return and you're really smart person, nobody can do their own corporate returns. It's just way too complicated.
Mhm.
And now people are going to tell you, well, you got to take a salary. And what I say to that is, no, you don't. There is no law or regulation that says you have to take a salary. In fact, the IRS in the fine print says that because they go to court on this all the time.
Mm.
The IRS says, if you read the fine print, they say that each case is judged on the facts and circumstances. Where people get into trouble is if they make $3 million and they take a $5,000 salary. And people do that. There was an accounting firm where the guy made $1 million and he gave himself like a $12,000 salary. I
Why? What
told
would
him
be the purpose
because
of
he didn't want to
what
pay.
they trying to do?
He didn't want to pay the payroll taxes. But I'm
Mm.
like, come on, that's ridiculous. But people hear about this. The truth is, the reasonable salary issue came about because corporations were paying their officers too much money. So it wasn't because people were paying not enough money. It's because a corporation would give their president a $10 million bonus. So the
Mm.
IRS said, fine, you're not deducting 10 million. You can deduct 500,000 because that's reasonable. But just
Right.
because you had a great year and you gave him a bonus, so that 9,500 does not become a tax write-off. That's what the
Mm.
reasonable salary thing. They're not going to pay Elon Musk. They can pay Elon Musk $1 billion, but Tesla is not going to get a tax write-off for $1 billion.
Oh, see, I
So
thought.
people confuse the whole reasonable
Mhm.
salary with people that aren't taking a salary. But now, if you're making a profit, what I usually go about, if you're making less than 30,000, it's not reasonable to take a salary.
Mhm.
Not at 30, and if you do, we're going to take a low salary, because if we took 30,000, you're losing money then, because then you got
Right.
to factor in the payroll taxes
Mhm.
and the cost. The lowest I think to get a payroll service is at least $50 a month. So there's $600. If you
Mhm.
take a $30,000 salary, that's another 4,500 just in FICA tax. So now, not only did you wipe out your profit, now you're showing a loss. That
Yeah.
doesn't make sense, does it?
No, it does not.
So maybe I'll give them a $15,000 salary. They'll pay half of the FICA now they'll pay 20, let's say 2,300 plus the payroll. And so now it's costing them 3,000. Okay. And
Mhm.
let's say that, and now you got to hire an accountant. Our firm, the prices are very reasonable. Uh, it's affordable. Okay. One of the problems is people think it costs too much to hire an accountant. That's not necessarily true. Okay. There is a shortage of accountants in the United States, but the mindset is, oh, I got to pay for an accountant. Well, would you rather pay the taxes and get audited? Have that
Yeah.
risk. It's like when you buy a car, you got to buy insurance.
Yeah.
Oh, I can't buy the car because I got to buy insurance. No, you factor that in, and it should be the same thing when you start a business.
Mhm. Because I'm thinking of all the people I've interviewed and a lot of business owners I know, a lot of coaches, consultants. I don't think any of them have an accountant. Maybe a couple, but most people, most business owners I know, they don't have one. They don't have one.
I know, and it's sad because, and I believe, because I've done a lot of research on this, and I said, why is this? And I believe it's because of the price thing. A lot of
Mhm.
people say, I'll hire an accountant when I start making money.
Yeah.
That's a mistake,
Mm.
because I could show people that they're actually losing money because they don't know about the tax deductions. They don't know about the C-Corp, where you can actually put your expenses into a box. And they don't realize that there's expenses that become business expenses that were personal expenses before. Almost
Mhm.
everybody works out of their house now.
Yeah.
You get an office in the home. I mean, so what I'm saying is, you actually you create tax deductions without spending any more money. Your car becomes partially a write-off. Your cell phone, your computer, uh, a lot of any education materials, and
Mhm.
people overlook those expenses. And a lot of people are working when they start a business, right? So they already
Right.
have taxable. They're either a lot of people that are retired start businesses now, so they already have taxable income coming in, and they can benefit from the write-offs and actually generate lower taxes.
Mm.
And they actually teach this. I'm like, I could show you how to make money even when you're losing money
Hey, that is a
without money. If you think of it, listen, all you got to do is, like I said, most people don't make money in the beginning.
right.
They start out, they're testing the waters. But as soon as you say, I want to make money, and then you take action. And when I say action, is you get in your car and you go to Staples to buy paper.
Mhm.
You're in business.
Yeah.
All of a sudden, now you can write off the gas and the car expense.
Yeah.
Uh, you make calls on your cell phone. Now you get to write off your cell phone.
Yeah.
So,
People don't look at that. They're not looking at that at all, I don't think.
I've talked a lot. I hope that I answered your questions. I think.
Yeah, you have. I have another one. What so when you do your research on the business entities, like how do you decide which structure is best for you with the type of business you have? How do you make that decision? Because you like I say you have a few to choose from, but it's still kind of how do you make that decision? Which one is best?
So, to me, again, if you go through all of the points that I make, I could tell you just by process of elimination, the
Mhm.
entity of choice for an active business. So I'm if you're in rental real estate, if you're buying property to rent, that's a passive activity, and you don't want to be a corporation for that. Okay, you want to
Mhm.
be an LLC for that. So, and you can't put everybody into a box. But
Right.
I'm saying over 90% of the time, if you're going to buy real estate and hold it and rent it, that's a passive activity.
Mhm.
It doesn't benefit you to be a corporation. You want to be an LLC for those types of businesses. If you're going to invest in an oil well, okay, some people are going to be, you probably don't want to be a corporation. And
Mhm.
if you're doing that, you probably can afford to have an accountant and a lawyer tell you what to be. But if
Right.
you're just a solopreneur, and it doesn't matter how much money you're making, the entity of choice is an S-Corp
S-Corp. Yes.
95% of the time. We have hundreds of clients, and we specialize in brand new startup businesses, people that don't hire accountants, people that normally don't hire accountants. And we
Mhm.
created a price structure. And can I share that with you?
Sure. Yes.
Our prices start at $57 a month for a startup, which
That's
covers
good.
all the bookkeeping, all the tax compliance. We have a fixed price for their corporate return and a fixed price for their individual. So on an annual basis, it's going to cost a new business, a solopreneur, about $1,600.
Mhm.
Okay. Most of the time, I could show them how they're going to save more than $1,600 in taxes.
Wow.
Or some people just like the fact that they have somebody to go
Mhm.
to ask them
Definitely.
questions. So, so if you're starting out, if you're a consultant and you don't have an accountant and you're still doing business as a sole proprietor, I would tell you that you might want to rethink that. You can go to Amazon and get my itty bitty book on everything you want to know about S-Corps, and that lays
Mhm.
everything out that we just spoke about. You can read it in about 20 minutes. That's
Mhm.
why we call it an itty bitty essay. That's my friend Susie Pruden who started that whole. She's got like hundreds of itty bitty books out there.
Okay. And I definitely
And
will put that in the show note, the links, all your books and stuff to so people can check those out. But that's a definite good one to start out with at S Corp. Because like I said, you don't hear anything about that. It's all LLC, LLC, LLC. No one talks about it.
and I found this out about 3.5 years ago when I was doing market research.
Mhm.
And I said, why is 25 million people sole proprietors? I had no idea, to be honest with you. When I worked for CPA firms, I mean, everybody was an S corp. If they had multiple businesses, they had other corps. If they were real estate, they were partnerships, classified as LLCs.
Mhm.
We're about thousands and maybe tens of thousands of businesses that I've worked with through other CPA firms. So it's like if you're a CPA, most of the time they'll say, "Yeah, you got to be an S corp." The only arguments I get from CPA firms, and usually the larger CPA firms, is they say, "Well, you got to take a salary." Well, yeah, because you're dealing with larger companies. You're not dealing with solopreneurs making 60,000 a year.
Mhm.
those aren't the law. You're not going to a big firm when you're doing that kind
Right.
of. So, I might be a little bit jaded, but it's my story and I'll stick with it. I'll be talking about this forever for as long as I'm here.
Yeah.
My mission, like I said, we provide a service for people that normally don't hire an accountant.
Yes, definitely so. I do have one question, and this is kind of off topic, but I've been seeing this lately, and I just want some clarification. So lately, I've been seeing where, you have the people that say what do they do? They help people get money for their businesses or whatever they are. But I've been seeing lately all of these Facebook ads, in this stuff about people. They're trying to get them cars and all this different stuff with business credit. And it's like what their advertisement is, what their message is like, hey, I can get you business credit and you can get new cars, you can get this and get that and use your business credit. And I don't know, I feel a certain way about it. I'm like, are they, like, I get what they're saying, but to me, it looks like it's something kind of, I don't want to say illegal, but it's like, I'm not trying to buy purses and cars with my business credit. Like, explain to me, what are
Well,
they doing right now?
it's becoming a lot more prevalent.
Mm-hmm.
Okay. I have been the last couple of years, we've been coaching people on how to go about it. Like I said, you start with getting a free DUNS number. You just go to, it's Dun and Bradstreet. You get a free, because they charge to, they're a business too, but you want to get listed under your business and, hopefully you're a corporation. What you want to do, so to answer your question, it is legitimate and it's becoming
Okay.
more and more uh, pertinent because when you're a sole proprietor, like I said, your business and your personal life are connected. You
Right.
can't disconnect them. So your personal credit score is very, very important. Okay, so when people go into business, they a lot of times they get overextended and it affects
Mm-hmm.
their credit score. Well,
Mm-hmm.
like I'll give you an example. PayPal has a program. You can now, if you're doing business with PayPal, okay, under your corporation, separate from you,
Mm-hmm.
you can get a PayPal loan. Now they make you pay it, I think, every week. Okay. But it's not like 30%. I think it's a pretty reasonable rate.
Mm-hmm.
Uh, so you can get that loan and it doesn't get reported on your credit score.
Oh.
Okay. So you can get access to money for your business and it's not part of your credit score.
Mm-hmm.
So now other ways, like I said, and it takes time, like PayPal would be instant. Pretty
Right.
much still got to go. You guys still prove that you're a business. They're going to check your articles of organization with the state. They're going to see if you have a website
Mm-hmm.
because they're basing it on your business activity. They're not going to check your personal credit. But over time, like I said, you get a DUNS number. So now you got a Dun and Bradstreet number. You got a separate federal tax ID number. You can go to, like, my cousin just started a construction business. I
Mm-hmm.
said, go to Home Depot and get a business credit card. Now they might only start him with like $500, but
Mm-hmm.
it's just like starting out with your personal credit. You start out with 500, you pay it. They say, oh,
Right.
this guy's paying this, and you get a Staples card. You get business cards outside of your personal credit, and over time, you're getting business credit, and then you can get credit through your vendors.
Okay. Because I
And
have read up on that, but I have noticed lately some of those people, and they're look like they're targeting, small business owners. You got the coaches and different things like that, Etsy, Shopify people. But I've just noticed that it seems like, they're saying like, oh, I can show you how to get a car
Well,
with your business, which I knew you could, but like you said, it takes a minute to do it.
no,
But the way they're
look,
advertising is like, let me show you how to do it quickly. And I was like,
some of them,
this
like I
don't sit
said,
right
like
with me.
it's becoming more popular. It's
Yeah.
another way to give financing for people that might not have great credit or no
Yeah.
credit, right?
Mm-hmm.
Uh, and more companies are making money available like that. And this all started with the whole microfinance concept, where I forget the guy's name, but he actually won the Nobel Prize. It took him like 30 years, and he said,
Wow.
there's a lot of he went to these poor nations, and there was
Mhm.
street vendors, and he's like, all of these people just needed like 50 or $100 to buy stuff to sell.
Oh.
So he went by their character instead of their credit score,
Mm.
and it became huge. So now there's a,
Mhm.
a company, there's a not-for-profit. Uh, oh, I forgot the name of it. I was donating money, but like
Mhm.
I could go and invest or loan money to somebody in Uganda, let's say.
Wow.
Somebody that my grandmother was a sewer. So there's
Mhm.
women overseas that make money by sewing. I'm like, oh my God, I would love to help that woman. So you loan her
Yeah.
$100, and I've always gotten paid, and you make a small percentage, but I'm not, and then I donate, you donate them. You're not doing it to make money. You're doing it
Mhm.
really to help uh, entrepreneurs.
It's
So
awesome.
that idea, I think, sprung up, and businesses said, hey, what if we do this, based on a business's track record instead of their credit score?
Mhm.
So yeah, I have no doubt, a lot of them are legit. It's like everything else, be buyer beware. There are
Yeah.
snakes out there, unfortunately, but it is legitimate. It
Okay.
is legitimate.
I knew it was legitimate, but it was just something about the ads I seen and some of the people. Because I'm the type of person, and when I see someone advertising, or whatever the services are, I'm looking at that person, and it just didn't match right with me. But okay.
So sometimes, like we know people in the credit industry.
Uh-huh.
Okay, I have a couple of contacts I know they're in, and they will help. They have programs where they will coach people on how to establish business credit. So there's
Okay.
businesses out there that will show you, and it's a legitimate
Mm-hmm.
uh, business. Now, if
Mm.
somebody's just trying to sell you a car, then maybe they're just trying to sell you a car. you know, and that's fine as long, but you got to look at every deal on its own.
Yeah, you do. Well, Joe, you are absolutely great. I mean, you have so
Thank
much
you.
knowledge on this stuff that's why I'm like, I got to just have you keep coming on all the time and
I would
enlightening
love
us
to.
on all this information because you're just like a plethora of information about taxes and stuff like
Yeah.
that. Just love it.
Just so you know, I don't know anything about relationships or raising kids, so don't
Like I said, everybody has their zone of genius. That's just not yours, huh?
yeah, I'm passionate about what we're doing, and it's not just me, it's my team.
Mm-hmm.
I believe that we're making an impact, and I wanna make more of an impact. There's too many people out there, uh, making the wrong decisions for the wrong reasons.
Definitely so. Definitely so. Well, we're going to wrap this up and we're going to play real quickly my new segment, This or That. I think people are really enjoying it. I've actually had people email me and tell me they like this or that. Because
Oh,
it's
I
like
just
a way
I
to
just
get to
listened
know
to this.
you a little
Yeah,
better and it's
yeah,
fun. So I'm
I
just
have
going
a
to give you a
feeling.
few questions, just a
Okay,
few, just
I'm
maybe
ready.
four. Okay. So you picked one you prefer. Um, would you prefer $10,000 in gold or $10,000 in Bitcoin?
Gold.
Really? What do you think? Look, I'm gonna.
Tell you why if you're interested.
Yes, I want to know why. Yes.
So when I did the casino, I was the house. I don't like
Okay.
gambling. I put 500 into crypto,
Mhm.
and the next day it was 700, so I put another 200 in,
Okay.
and now it's down to 600. I'm like, "No, I don't like it when it goes down."
When it goes
I'm
down.
not a gambler. So gold, I would definitely take the gold.
I just don't know about Bitcoin. Anytime I have someone on and we're talking about Bitcoin, I start asking questions, but it's just something about it that I don't know. I just can't wrap my head around it, I don't think. But you would
I'm not saying it's bad. I mean,
mhm.
I could say, "Oh my god, it would doubled," and but gold is gold,
Yeah.
you know? If
Okay.
if I can't use it to buy something, I could wear it at least.
Right. I totally get what you're saying. Yes, yes. Would you rather have six sons or six daughters?
Oh, 6 sons, that's easy.
Really? I don't know why I seen that question and I just busted out laughing when I said I'm gonna ask Joe this question. Okay,
That's an easy one. Nothing against women, I love women, but yeah.
so I heard boys are easier. So
Oh, you don't have kids, obviously.
no, I do, and I have boys and girls, and I will. Yeah, boys are easier. Girls are.
Oh, okay.
I can only speak for mine. They're a little bit more moody, a little bit more sensitive. Boys are just loud for me. They're loud. They're rambunctious. They're everywhere. But yeah,
I
they're.
looked at it as like, the boys can go out and scrape their knees, that's okay, but if my daughter did,
Oh yeah,
that's not okay.
everybody
My
stop what you're
boys can
doing.
get into a fight, they can get, a bloody nose. Okay, you got into a fight, but if my daughter got in a fight, no, I
It's
care too
different.
much. I'm like, oh my god, taking care of 6th grade, and my sister and my brother-in-law have four daughters and
Wow.
and 2 granddaughters.
Whoa. They have no boys.
Nope.
Oh, wow. Yeah, that's a life of emotion. Is that what I'm
Oh,
saying?
yeah. Yeah, God bless Joe. If you're listening, Joe,
Definitely.
pray for you all the time.
Oh my goodness. Okay, what about let me find some more. I have like a list of questions that I like to ask, and I want to always give you some good ones. Um, here's a good one. Be lucky or talented?
Lucky.
And it's like anytime I think I know the answer that I think someone's gonna say, I'm always wrong. I really thought you were gonna say talented.
I had to think about that.
I like to give you stuff to think. I really do because I love to rack your brain. I just always see you as
Alright.
so smart. Yes, so smart. Would you rather be with someone for passion or stability, like as a relationship wise, like your wife or your girlfriend?
Yeah,
Passion or
stability.
stability? Stability is
Stability.
better. I think when you're younger, it's the passion. And as you get
Yeah.
older, it starts to be stability.
Yeah, when you're
Yeah.
younger, your heart is beating. Now I want it to keep beating.
Right, right. And as you get older, it's like, I don't really care if you don't have to
Yeah.
be that sexy, long as you know how to, pay
Yeah, I
bills.
think as long as it's important to be compatible than to be in love.
Dang, does that sound bad?
I don't know. I don't know, there's nothing
Compatible.
love is great, but I'm like, it's a roller coaster.
It is.
That's my opinion. Maybe because 'cause I'm
It
getting
really
older.
is. Well, I'm gonna really have to think about that, what you just said. I'm like, huh. I mean, I totally get it, but I get it. Love is, yeah, it's a roller coaster. I'll give you one more. Would you rather have fame or money? Famous or
You know,
have money and nobody know you?
this is a great question because we actually had this in my mastermind a couple of weeks ago, and it
Hmm.
started a whole big debate, and I would rather have the money.
Me too.
Yeah.
When I think I asked this question before with somebody, and me and the person, we both decided that yeah, we'd rather have the money. We don't care to be famous. We
Yeah.
just give me the
And
money and
all
leave me alone.
yeah, all you gotta do is if you know somebody that's famous, you're like, "Oh my god, dude, be careful what you ask for."
Yeah,
Comes with a
yeah,
lot of responsibility and pressure, you know?
it really is. So I'd rather have the money and live my life peaceful.
Yeah.
Yeah,
And
definitely,
money
definitely.
comes with a lot of responsibility and pressure too, but
Yeah,
I'd rather be dealing with that kind of pressure than the
in the
fame.
whole world. Yeah, because when
Yeah.
you have famous, you're dealing with the whole world. At least if you have
Yeah,
money, you're dealing
I
with
don't
your
want
family.
anybody I don't want anybody reading about me in the newspapers, not something that I didn't have a choice in.
Mhm. Exactly,
But
exactly.
thank you for the
Well,
question, that was fun.
yeah. Well, I so enjoyed you. Of course, I will have you back. And make sure, if you have any new books or new anything, just send me links and I'll put all your links in the show notes. And I so enjoy you, Joe. Thank you so much.
Okay, thank you and good luck, anytime.
Thank
And I'll
you.
have you on
Thank
my
you.
podcast after tax season.
That would
We
be great. I would love to be
yeah,
on. I don't know what I want to
I'll get to
what we will talk about, but we'll figure it out.
I'll get to put you on the spot, believe me, it'll be interesting.
It would be. I'm not used to that. I'm not used to people asking me questions. So we're
Alright,
gonna see how I do.
okay, I'll make a
All
note of it.
right. I'll see you
Alright,
next time.
thank you.